Oh, in here with the business then, we've got some important earnings information from Sony to kick us off.
Yeah, one of the big ones to report this week, Stuart. We know the story with Sony, a company that's had losses now for the last 4 years, and this indeed is the fourth successive year of full year losses. Let's try and give you some of the numbers for that. A net operating loss of just under 470 billion yen. As I say, that's the fourth year in a row. Having said all that, Sony's saying that it's forecasting a profit for 2013 of 30 billion yen. Remember, this company is still suffering in the wake of the Fukushima disaster, the floods in Thailand and so on, the knock-on effect for supply chains. Sales down nearly 10%, but I did pick out what I thought was interesting, that Sony Pictures, the movie studio that they've invested heavily and had big hits with the likes of the Spider-Man movies, actually doing pretty well. Its sales are up nearly 10%, despite the fact that it did also make an operating loss.
A few other big names as well have been reporting, haven't they?
Yeah, Hitachi, what a contrast with Sony. And a lot of people are saying that companies, Sony should follow the lead of companies like Hitachi in investing in infrastructure rather than electronics. We've seen Hitachi posting a 45% rise in full year profits. Remember, Hitachi was knocked sideways by the Fukushima disaster, but has picked itself up much faster than the likes of Sony. One of the companies to report, Zurich as well, the insurance company, first quarter profits up nearly 80%, so a good quarter for Zurich.
So some reasonable numbers out then that offsetting some of the Greek woe on the markets.
Yeah, the European market's opening quite strongly, actually, Stuart, particularly the IBEX in Spain, one of the countries after Greece, which is causing EU leaders the most woe. The IBEX opening up just over 1%, but you can see the DAX, the CAC 40 in Frankfurt, the CAC 40 in Paris, almost forgot where I was then, and the DAX in Frankfurt all opening up nearly 1%. On the Asian markets, again, a very choppy day's trading for the Nikkei, down a third of a percent despite some of those earnings numbers out.
Angela Merkel, she knows where she is. Just hearing of some quotes that she's just been giving in a speech.
Yeah, indeed. We've got pictures, I think, of Angela Merkel speaking in Germany, where she said that deficit-driven growth will take us back to the start of the crisis, and that is very much a shot at incoming new French President François Hollande, who, remember, was elected partly on a mandate to invest in things like civil servant jobs, invest in infrastructure, using debt basically to finance that. So that is very much at odds with what Angela Merkel wants. She has shown some concessions. She's already, of course, spoken to François Hollande on the phone. They're due to meet. She's shown some concessions, is willing to discuss some sort of growth pact, but certainly making very clear in front of her own people that deficits are not the way to go.
Yeah, it'll be interesting to see if they can resolve those apparent disagreements, won't it? So Greece then, as we've been reporting in the news, continues to drive market sentiment down, and investors are picking up on a significant change in language by key EU leaders. It was once taboo to even think Greece could exit the euro and even the EU. Not anymore, perhaps. Even Germany, the country that ultimately decides the fate of Greece, has given up trying to put any positive gloss on the situation. Siobhan Silk has more.
Up to now, European leaders have been reluctant to be drawn on Greece's future in the Eurozone. In February, European Commission President Jose Manuel Barroso would only say he wanted Greece to stay in the euro. But now German Finance Minister Wolfgang Schäuble is beginning to sound more resigned to the possibility of an exit.
If Greece does not decide to stay in the Eurozone, then we can't force it to stay in.
Neither will it be forced out. The German government says it will continue to show solidarity with Greece as long as it fulfills its commitments. But after last week's election, anti-bailout, anti-austerity parties are the biggest political force in Greece. The disparate parties have failed to form a coalition. Now a political crisis is brewing. European leaders are keeping a close eye on the deadlock.
The current situation is extremely fragile and extremely dangerous, because now it depends basically on whether a reasonable coalition government will be able to form in Greece or not. If not, then the consequences would be really horrible for Greece and perhaps for the rest of the euro area.
After 2 years of austerity, Greece is in deep recession and unemployment is at a record 21%. Schäuble insists the country must stay the course of austerity, but some German lawmakers are taking a different tack, saying Greece should be offered a controlled exit from the Eurozone without being made to withdraw from the EU.
Pick up on a few more business headlines now. Shares in Spain's Bankia have dropped another 2% after the government completed a partial takeover in the country's most vulnerable banking group. The government's taken a 45% stake in the firm by converting nearly €5 billion of state aid into ordinary shares. Minister said the move was a necessary first step to guarantee Bankia's solvency.
And Rupert Murdoch's family have further entrenched their position in the News Corp empire by doubling their share buyback. News Corp is repurchasing $10 billion of stock. That's double the amount announced last summer as it fends off questions about the company's leadership in the wake of the UK phone hacking scandal. The announcement was made as the company beat estimates to record a 47% rise in third quarter profits.
And next, rip-off prices, boycotts by EU leaders over the treatment of opposition leader Yulia Tymoshenko. Ukraine's hosting of Euro 2012, well, it's turned into a bit of a PR own goal. That's even before kick-off. But over the border, it's a different story for co-host Poland. One of Europe's few growth stories of recent years is showing why the beautiful game can return some nice-looking figures for Poland's economy.
This is what the site of the Polish National Stadium looked like back in 2007, the year that European football's governing body UEFA picked Poland and Ukraine to host Euro 2012. And here it is 5 years later. It's a fitting symbol of the transformation the country has seen since it won the race to stage the sporting showcase.
5 years have gone by since we were awarded Euro 2012. But when you look at the investment projects we've put in place, you'd think it was 7 or 8 years.
Euro 2012 kicks off on June the 8th in the brand new National Stadium in Warsaw, built for the equivalent of €450 million. But the Polish capital isn't the only city to have benefited from Euro 2012, with tournament-related projects enabling Poland to tap funds from the European Union. Gdansk, for example, boasts not only a new stadium, but also new tram lines and a ring road. The price tag there has been around €1.2 billion.
If we hadn't had the European Championships, we wouldn't have been able to achieve half of what we've done. Before 2007, the spending plan had been €600 million.
Fans are expected to spend €180 million here during the tournament, but Poland is looking to tap the benefits well beyond that. The country has been the only member of the 27-nation EU to keep growing during the economic crisis.
We estimate that the Euro 2012 factor will add around 2% to Poland's GDP up to 2020.
Most of Poland's Euro 2012 linked projects are not directly sport-related. Only 4% of spending going on the 4 stadiums, for example. When the final whistle blows in July, dozens of other projects, notably a highway programme, will still need to be finished.
And just before we go, we know the Avengers movie's been a smash hit because Owen's been telling us over the last few days. But what if all the smashing they do was real? He's got a few numbers for us.
We have given this movie a lot of airtime, Stuart, but this is interesting. This is a company called Kinetic Analysis. It's a disaster costing firm. Actually looked at what this movie might cost, or what the carnage in this movie might cost New York. Big fight, I think, in the finale of this movie. There's the total cost. They think it would cost around $160 billion to Manhattan. That's the cost of human life, the cost of the damage to all the infrastructure. That is double the damage, of course, that was caused in the wake of the 9/11 attack. So it gives you an idea of the comparison. Of course, it's a little bit facile making that comparison, but you can see just how much it would have cost had it all been real and not make-believe.
I've got a fact for you. Incredible Hulk does not exist, so we're all okay. Owen, thank you very much. 11 more business very shortly here on France 24. Latest news coming up.
They are the worker bees of China's labour market. 4 million poorly paid men and women driving Guangdong's massive textile industry. But now they're demanding higher pay and better conditions. In response, companies are relocating to countries where labour is even cheaper, such as Vietnam, Cambodia, Bangladesh. Made in China is a worldwide brand, but are we now witnessing the beginning of its end? Find out in Reporters, today, 9:45 p.m. Paris time, on France 24.